Hello, Josh. Good to see you.
Likewise, Richard. Yeah, happy Thursday.
Happy Thursday. You're not in your usual environs.
I I am not, man. The last 3 weeks I've been traveling. We had to skip last week due to my conflict. I was in Seattle and man, I'm in Austin today and was like, I cannot miss another one of these. I've got just questions queued up. I'm like, I can't wait another week. So
Cool.
I've rearranged my living room and I've got TVs as computers. It's crazy, but
So does
the
this
show
mean,
must go on.
work from home is over?
Yeah, that's exactly what it means. Fortunately and unfortunately, it's a dual-edged sword. I missed I'll call it momentum, man. Like
Mhm.
being in the office and hearing people talk and that energy, it brings something to you for sure.
Nice.
Something else that's brought me energy, and then I'll get going, is you a baseball fan?
Um, you know, I grew up as a baseball fan.
Uh,
Actually, Dusty Baker was on the Dodgers when I was growing up, playing for the
Check that out.
Dodgers. So
Listen to this.
I always loved Dusty Baker, and so anytime a team's got Dusty Baker at the helm, I can't hate him.
Yeah. Well, you're fitting a slim pickings right now. Most hate the Astros.
I know.
I've
That's
been
why I
called the
say I can't
cheater. You know,
can't hate
I
him.
mean, yeah, every flavor of it, I've been called. I do want to maybe, this is a data-driven show, and let me show you this. I'm going to make an effort really quickly to maybe win some fans over.
Right.
This would be my only effort, but the Phillies have won 3 World Series, and it's been followed by 3 recessions,
Yeah, it's
and
a
so
crazy indicator,
maybe
isn't it? Gives you pause about all indicators in general.
exactly, yeah. Well, I was going to ask, man, if this was a cycle you were aware of.
I am not betting the farm on this one. I
Okay,
like it. I like it. It's a good reminder that you can overfit the data. But
100%.
and it's fun, but I'm not betting on it.
Yeah.
Although, I do feel like Philly's got a chance, and I do feel like a recession is here. So, who am I to say, man? In
Yeah.
general, I am a big believer that we are not in as much control as we would like to believe.
Mm,
And all the authorities that we're listening to are not in control. I don't think Jerome Powell is in control. So in that sense, I really enjoy this indicator because it does sort of make you go, WTF,
yeah.
like what the heck is really going on behind the scenes here? But I'm not betting on it.
Yeah. For those that are just listening that can't see what I've shared here, there's the Phillies have won 3 World Series. The first, they were the Philadelphia Athletics. They won the championship in 1929, followed immediately by the Great Depression. 1980, they were truly the Philadelphia Phillies. At that point, they won their first title as that organization, followed by a 3-year recession. 2008 was their last win, shortly after, followed by the Great Depression. So I will put your Astros gear in the mail, man. That's it's on the way.
Right. I forgot you're a Houston
It's exactly right. Yeah.
guy. Well, good luck.
um, Thanks, brother. Here's my typical start. I wanted to maybe just do sort of my how is Richard feeling? My temperature check on the markets is more or less what I usually call this. I'll give you some numbers and then I'll kick it to you. S&P 500 is down 21.5% year to date. NASDAQ 33.5%. Bitcoin and Ethereum down 56, 57% respectively. CPI is 8.2%. Mortgage rates have gone from 3 to 7% in 6 months. And then yesterday, the Fed announced their fourth jumbo hike. It's 3/4 of a point. Jerome Powell, I'll scroll down just a second, even said here in the article, it's very premature to think about pausing. When asked about how markets should interpret this, he said officials would likely continue to raise these rates higher, even than their previous forecast, which showed that it'd be peaking about 4.6%. I think in our last call, you weren't necessarily calling your shot, but we felt like maybe we were nearing the bottom. I just wanted to see, 3-4-ish weeks in, we're continuing to get some news here, man. How are you feeling? What are you thinking? All that good stuff.
I don't remember ever being quite so scared, disturbed, and angry as I am right now. And, you know, on so many levels. So at one level, so I did this interview with a very famous analyst, Robert Prechter, Elliott wave theorist. And he showed me some very unsettling charts about like how historically out of whack current valuations are. And how far we have to fall to get back to, you know, long-term normals over the past 100 years. And it's similar to the stuff Ben Hunt showed back with kind of like the wealth effect versus the growth in GDP, right? So that's really sobering stuff, because when you look around, you know, you can't see where the hope is going to come from. You know, what's going to save us at this point? You watch the conference yesterday and see the market's reactions to it, and you realize that the whole markets are, you know, hanging on the words of one man. That's a very unsettling place to be, right? We don't know what's up and what's down anymore. And so meanwhile, like the very fact that like that I'm this, you know, afraid could well be a sign of a market bottom, you know. And we are heading into the seasonal indicator of the year, the Halloween effect, if you want to call it that. You know, the last few months of the year tend to be bullish going into January. So it's a real mixed bag. And the only thing I can say is that, you know, we're living in Jerome Powell, Larry Fink, and Ken Griffith's world, you know, and we're just living in it. It's their world. You know, the world's becoming more and more financial. That's what I've been saying. More and more under the influence of financial and corporate powers. And we all have to be financially literate. We cannot be playing the same juvenile games in the markets that we've been playing for decades now, because things are different. And we've got to come to terms with that. We have to start behaving, you know, in a more intelligent and a more thoughtful and a more long-term way. And we got to own it. So is this the bottom? I still think we're closer to a short-term bottom than a top, but longer term, I'm still bearish through at least middle of 2023. That's what our cycles indicators forecasted back last year, and nothing's changed to take me off that. So I don't think we've seen the lows ultimately. I still am inclined to think we'll see a pretty good bear market rally in the next few months, but on the other hand, it's perilous. So again, the main thing is you've got to be understanding what your time horizon is, what your risk tolerance is, and what your exposure is, and thinking in terms of those opportunities and not in terms of short-term moves, because I think in the very short term, we don't have it. We're being outplayed. You know, I feel like Terminator is in the market, you know, and it goes back to what I've been saying for years about the Citadel and payment for order flow. And there are, you know, institutions that just have a much more comprehensive view of the markets than we ever will, and it's proprietary to them. You know, Citadel, the hedge fund, most people don't even know that Citadel Securities, the market maker, the wholesale market maker, is different than Citadel, the hedge fund. And Citadel, the hedge fund, is up like 25, 30% this year. Okay. While everybody else is down 25, 30% this year or worse. So sorry, I don't have a easy answer. You know, my answer is start thinking longer term, hunker down, and manage risk.
This Halloween effect, this market rally is something I wanted to sort of back into. So give me a question or two to get us to that. I like that the Terminator being in the market. I'll be back. Yeah,
Ah,
that's quotable.
I mean, look at just yesterday, the market, the statement comes out at 2 o'clock. There's one sentence in there that suggests a little bit of dovishness.
Mm,
Markets start to rally up 1%, and then Jerome Powell gets on TV, and the thing falls 3%.
yeah,
It's just crazy. You cannot trade that unless you got superpowers.
100%.
So you can't even try, and I'm afraid these people that are really driving that are gonna run people out of the markets.
Mm,
And then we're not gonna have markets. So it's tough.
yeah. Last time that we met, I'm gonna just stay in this markets vein for 2 or 3 questions. But last time we met, I brought this question of like, me as a millennial investor, and a lot of the folks that I bring with me, all we know is the tech sector. We talked about QQQ and like how this thing's been exploding. Let me show you this just to sort of support last week's conversation. I mean, this graphic shows the tech giants. Alphabet, Amazon, Apple, Microsoft, those 4 combined make up about 20% of the S&P 500. So last time we spoke, I was asking, will tech rebound? And I had folks I had folks on the email. I had folks in not Descript, the messaging app Discord that we use. I had folks come back. My own brother called me afterwards and was like, listen, we talked about tech stocks, but what's coming next? And so I think my question is, post-recession, intra-recession, outside of tech, because tech obviously seems to be bleeding from its sides. And last time I said, will tech rebound? I think this time I should ask, what else? Like, is there another sector outside of this tech industry that, as this thing does its little spiral, you're changing your focus and looking at any of these others that are out there in the market? Like, are you focusing on another sector outside of tech today? And I've got more data. I just want to see if you had anything here first.
My general thesis is that real assets are going to increasingly gain value on financial assets.
Mm.
Okay, so real assets are things like energy, real estate, things that people actually need to live their lives. And financial assets, which tech companies, they do have real assets, but they're very financialized.
Mm.
You're really betting on future growth, and they're borrowing money, and and they're not essential for people to survive. Okay. And that was actually one of the charts that Robert Prechter showed, which was like 100 years ago. If you took one share of the Dow versus a basket of commodities, the CRB index, one share of the Dow would buy you one basket of commodities. Okay. Today, one share of the Dow buys you 200 baskets of commodities. Okay. So that's crazy. Whoever knew it could get that far, right? But with interest rates going up, financing getting more expensive, the financialization of the world is harder to sustain, right? The easy money isn't there. So that puts a premium on the things that people need to survive. And so energy is a big one. I don't think real estate's going to get hit as hard. I think land, Bill Gates was buying billions of dollars of land. And I don't think that's a naive move, and that's something I actually did myself back in 2021. So what else? I mean, I don't think the financial industry is going away. I think financials will continue to have a privileged position in the economy and in the world. But I don't think that with interest rates heading up, I don't think that's about to end. I think it's more expensive to be a financial than to invest in real stuff.
Yeah. This
And good riddance to Meta, man.
oh my gosh.
I mean,
I have a question.
nobody
I'd put it into
deserves
next
it more
call.
than them. You know, it's just insane.
Yeah, this is that
What
AR
Schadenfreude,
VR
you know?
investment. This
I
is
mean,
bonkers.
I hate to say it, but it just makes me very happy.
Yeah, same. Yeah, we're both smiling. Yeah, that's last time I asked about tech, you hinted at energy. This is a really awesome graphic. S&P 500, every sector in the S&P 500 has fallen, while energy is up 66%. Exxon just announced that they had their biggest quarter in the company's 156-year history. Chevron had their second best quarter in company history. You combine those two guys, net profits of $31 billion in a quarter. I mean, these guys aren't hurting at all. I think it's a quiet success while everybody else is just bleeding and suffering. Maybe it's energy. I mean, you hinted at it here. As things shift, is this a sector you're keeping an eye on?
I mean, you have to have exposure to energy, right? Do not go out and, sell all your tech stocks and buy all energy stocks, right? That's not the right move. You got to have balance. You have to have, good uncorrelated investments, and energy's got to be in there, or else you shouldn't be in the markets. So, but again, it's up a lot. Doesn't mean it can't have a big correction. Energy is historically more volatile. So, be careful, but position size accordingly, position size by volatility, find uncorrelated assets. That's the holy grail portfolio strategy. And I think anybody who isn't allocating some assets to energy at this point is making a mistake.
Richard, you hinted at I think you call it the Halloween effect, and I hadn't heard of that before, but you're kind of getting at a question that I wanted to ask, and that people have been submitting here in Q4 of, not everyone has disposable income, but there's obviously, I mean, people are spending money, and here at the end of the year with Black Friday and holidays and people trying to buy gifts and treats, and Q4 feels like a time where people exhaust their disposable income and tend to pick things up a bit. And there's just more spending and flow, and just the economy seems to be doing okay Q4 wise, if just surface level. And my question is, the logical brain says Black Friday, companies like Amazon, Shopify, Walmart, like where people are going to spend, back in the Brinks truck up to spend their money. Maybe we should get ahead of that and expect some sort of pop here in Q4 as an investor. And I know we're not about.
What do you feel, John? What do you feel? Are you ready to spend?
I'm speaking my logical brain.
Are you feeling flush and like you're ready to go out and splurge this holiday season on your loved ones? I'm just curious. Really serious question.
Yeah. I'll give you I know most are not. I feel this is probably not the answer you're looking for. I feel I'm grateful that I'm in an opportunity. I'm in a position where I could go out and spend, but it definitely doesn't feel like last year. Yeah, to answer your question.
And meaning it feels a little better than last year, or a little worse?
Oh, a little worse than last year.
Worse than last year, right? Yeah. And I mean, that is what Jerome Powell's trying to do, is make us all feel worse.
Yeah.
And he did pretty well yesterday.
Yeah.
And I think that in general, people are not really eager to go out and spend big this holiday season. So that's my guess. And Amazon feels the same way, right?
That's right.
They came out and mourned about their holiday sales and took a big hit.
That Halloween effect where you said markets will rally at the end of the year. What is that? Could you double click on that?
It's just from the end of October into the first week of January over the past 100 years. It's like 90% of the time stocks are up.
For what reason? What reason do you think would cause that? And I mean, we're just spitballing, but if it's not the increase in consumption, what else could it be?
I don't know. My personal thesis is that, we are under collective cycles,
Mm,
psychological cycles. And, you have the summer period where people are kind of not paying as much attention. And then you come back in the fall and you want to kind of find where the bottom is.
mm,
And so you probe and then you look for a rally into the end of the year. And so in some ways it's become a self-fulfilling prophecy. I don't know if there's some other explanation for it. The Foundation for the Study of Cycles has speculated on it over the years. As far as I know, nothing has really held ground as a true explanation for why that is.
uh, while, and this is a question I brought in here. While you're evaluating markets and looking at, I mean, you've been talking for the last year plus that same time as Elon and these other guys started pulling money out of the markets. We heard something similar from you. Get some powder dry. The winter is coming. Winter is coming.
Mhm.
As you've pulled your investment, as you've pulled your capital out of the markets and you've dried up this powder,
Mhm.
where do you keep that? Is it something as simple as like an Ally, like online savings? Or have you taken the land route you mentioned earlier? Are you doing gold bonds? Like what are you looking at?
I mean, I definitely invested in land and then made sure that I had enough cash to survive for a few years if need be. I think that cash is going to continue to be something that is valuable. And as asset prices continue to fall and financing gets harder to come by, even though cash is getting eaten by inflation right now, it still is increasing in value relative to everything else that's falling even more,
Mm,
right? So I think, I haven't personally done a great job of taking advantage of short-term interest rates, moving my money around to different banks and trying to find the biggest yield. Um, I know there are options out there. It is worth looking into. I'm not sure. My cash is sitting in a bank earning nothing.
to your point, I mean, from my podcast, like very worst case, if that is the route, is online high yield savings account, like the Ally online savings account, to give you something better than the 0.006 that Bank of America does or whatever it is.
It's crazy what the banks are now
Oh,
paying right now. I can't believe it. I don't understand it. How do they get away with that?
yeah, yeah, it's robbery.
I mean,
I'm
the
going to show you
overnight
this now.
rate, lending rate from the Fed is like what, 3+ % now?
Mm. Is this have you heard of I bonds? These guys have been just growing in popularity maybe over the last 6-ish months. I'll give you a little bit of background on like how I came about them, but have you ever heard of these before I get too deep?
Absolutely. I can't, it's like you can only put $10,000 into them or something.
I think you're right. Yeah, there is a cutoff on how much you can invest out of the gate.
Yeah,
But here's the crazy thing.
but it's great.
Yeah,
They should be
is
doing this.
last Friday, these guys sold about $1 billion worth in a single
Right.
day of I bonds.
Yeah.
I first heard about this in the Tim Ferriss like random show that he does with this guy Kevin Rose. Kevin brought it as one of his bullets and was like, "I'm not a financial advisor. Do not take this as investment advice, but something weird is going on over here, and you should take a peek." These guys, I mean, the headline shows it here. They sold $1 billion worth in a single day. I'll close this out and show you a little bit more about these guys. Uh, I'll give you this info and then I'll see if you had any just insight, feedback on this sort of investment strategy. But these guys earned what's called a combined rate, which is a combination of a fixed rate. And you would know that at the time of purchasing. I looked yesterday, it was updated yesterday. And the fixed rate for these guys right now is 0.4%. The rest of it is made up on this second piece, which is called the inflation rate. This inflation rate is tied to CPI. It's adjusted every 6 months, which is why everybody went in on Friday and made this purchase. It was the time for them to change their inflation rate. These guys, because they're tied to inflation, they call, or they claim to be inflation protectionary, like they protect you from inflation. And as inflation climbs, this interest rate will climb. And then as the interest rate drops and becomes deflationary, they would stop at zero. I'm had not heard of these, but in Friday's investment sort of funneling and everyone invest, I went and looked, and the investment rate, or the interest rate at the time, was 9.62%, and that would be locked in for 6 months. They just changed it. It's here at the top. This happened yesterday, and it is now 6.89%, and it'd be locked in for 6 months. I'm just curious. I mean, have maybe I bonds as a investment bucket, but more of just the bonds market as a whole. This is not something that we've spent much time talking about. So just see if you had any advice on this, feedback, anything, man. Poke holes at it.
I can't begrudge anyone who sees this as a lifeline. I hate the fact that we're loaning our money to Big Brother, to the federal government, which I think has way too much power and control already. And I'd much rather see more locally inspired investment opportunities than just, again, like it's Jerome Powell's, Larry Fink's, and Ken Griffith's world, and we're just living in it. You know, so loaning your money to the federal government is definitely sustaining the centralized economic model that is increasingly dominating our lives. So meanwhile, it is about the only game in town right now. And it makes a lot of sense if you're nervous about equities and nervous about inflation. You know, seems like a no-brainer.
I've spent now 31 minutes in the stock market, or in the markets, just investment wise. I'm going to back up just a little bit. There's one topic that I think every platform ever is going to hit, and I'll make sure that we spend just a second talking about this. Let me play this video. I thought this was so funny. This past Thursday, Elon finally, we've been talking about this for what feels like a year, closed on his $44 billion acquisition of Twitter. I mean, since then, he's continued to do just the most Elon things. Day one, he shows up hearing a sink into the headquarters, let that sink in. A couple days later, he lays off the top four of the top executives within Twitter, including their now former CEO. I'll show you the next tab here. He's then went on to make
a meme. I just gotta, comment on this. Let that sink in. The man is a meme master.
Oh, the best, the best.
Unbelievable.
Yeah. He's got his doctorates in that for sure. Then he went on to announce, this is yesterday, went on to announce 2 days ago, went on to announce Twitter lords, this lord and peasants model that we've been following for who does and doesn't have a blue check mark doesn't make sense. Power to the people for $8 a month. So he's offering, those that want to get verified can pay $8 a month to Twitter. Obviously an additional revenue stream for those guys. And there's some incentives. He goes on in the thread here to talk about, you get the blue check mark, which some people would get excited about. That doesn't really get my gears going. You get prioritized replies and mentions to help you sort through the bots, and you start appearing at the top. Half as many ads, I thought was an interesting one. I mean, man, I'm happy to take anything you have here on maybe just this power move by Elon, the completion of it. Maybe it's about Twitter and do you feel like the business is going to change with Elon being the captain? Like any feedback, thoughts, comments on just this circus that's going on out here?
Make sure you got a lot of popcorn.
Yeah, more to come.
More to come. Overall, I'm happy that Musk did get Twitter and that he's cleaning house. I actually like the idea of people identifying themselves and getting authenticated. So the blue check mark works for me. I don't care for the, you know, I mean, how do you make sense of it all, Josh? At one level, you're like, he's the meme master of the universe. At another level, you're talking about, well, he's kind of making things real, by he builds things. He actually does build cars and rockets and tunnels. And I think he wants Twitter to be a little more real than it has been. Again, going back to kind of financial things versus real things. In some ways, memes are financial things and not real things. But overall, I'm encouraged by the things that are happening at Twitter. I do think it went way beyond its mandate. And I think Musk has some vision that isn't really understood by the markets yet. I think it ultimately is kind of his vision of the metaverse, if you will, that's different than, say, a Zuckerberg. And I think it does involve eventually some kind of crypto, Bitcoin aspect to it, of digital sovereignty. So we'll see. Make sure you got a lot of popcorn. It's going to be a wild ride.
I'm not going to spend much time on this next little graphic, but there was a really cool, let me shut this out. Him talking about, half the ads, I maybe just call out and then I'll move on. Ads aren't going anywhere. This is Twitter's revenue of last year, $5 billion. Almost all of it was in ads. If they converted, and these give you the conversions rate, they charged $8 a month. They have 238 million active users. If just they're currently verified, those that have the blue check mark today, converted to the $8 a month, they'd make $40 million. And then you go on, you follow this graphic over at $8 a month, which is what Elon announced on Twitter. If they did 2% of that 238, if they did 6% of that 238, they did 5 or 10%. I mean, the chances of them overcoming or even getting close to what ads are bringing in is, I mean, they're going to have to get up to 20% conversion rate, which would be bonkers. So,
well, look, the hope is that he really is looking to do something other than the surveillance capitalism ad supported model that is not transparent about what's really driving the algorithms, that is modifying people's behavior in support of driving them to the behaviors desired by the advertisers. And I think that's a really problematic model for social media in general. So my hope is that he's going to do things differently, and that by taking it private, he's willing to absorb some of that pain for a period of time while really turning this, ad-driven oil tanker around. We've got to get past this surveillance capitalism, mega corporations, ad-driven economy. It can't be our future. And my hope and my prayer is that he sees that too. I don't know. I'm not privy to what's going on inside his head. I just have some hope that he sees at least a little bit of that, and that he is willing to, do the hard things to turn this ship around.
Yeah. I'm gonna close us on a super positive. This came out on Friday. This is your, I'll call it, new website. I got a email, a newsletter about it as well. We'll click over to that. This was on the 28th, and we've gone through, I'll call it a name change. I'll call it a rebrand. We'll see what you call it here in a second, but I don't want to steal any more of your thunder. I've now shown 2 screens and I feel like I've given it away. Can you just share, what inspired the name change, and or should we should we be expecting anything different with the current platform, and maybe even like roadmap? Are you changing direction at all, or what's pushing this?
We've been looking for a new name for a long time. New names are hard to figure out. I knew it wasn't RiskSmith. Nobody can pronounce it. They always called it RiskSmith. And I don't want it to be about me, right? I want this to be financial technology that stands on its own. And I didn't come up with the name Finiac. I think somebody else came up with it in our team, and it just started growing on us. And I think, I have a couple of taglines in mind for it. One is fanatical finance. Okay, so Finiac, it's kind of like brainiac and maniac with finance, right? So another thing is like crazy smart finance. The bottom line is, I think people have to be financially literate. I think we live, as I've said over and over again, in financial times. Yes, I think real assets are starting to recover some ground on financial assets, but there's no getting away from the fact that we live in financial times, that the internet itself is financial. Web3, if it comes into being, is kind of the financialization of identity. Okay. So we have to be a bit fanatical about finance, or we're just going to keep getting our pockets picked by the people that do know about finance. And so being a bit of a Finiac, right? So you can be a Finiac, you can be a little fanatical about finance, you can be crazy about smart finance. It doesn't take over your life, but you acknowledge that finance is important and that you need to do something about it, right? So that's the idea. It sort of speaks to a culture and a community too, and that we're going to figure this out together. So obviously risk management is part of being a Finiac, right? You have to be risk literate. You have to understand what your risk tolerance is. And then ultimately, I think we need to own our own financial identity. We need to own our own financial data. That's a big part of what I'm really passionate about. How do we basically kind of re-architect the wealth management industry so that it's built around individuals? It's built around people in control of their own data, developing that asset of your data, your kind of financial history, all your different financial feeds, and then having the advisors come to us, instead of us always having to go to them and having our wealth assets kind of stovepiped, in all these different places, not talking to each other. So I think that speaks to what people like yourself see in the digital crypto world, right? I don't think the digital crypto world always delivers what we hope it will. But I think this idea of being more in control of our digital identities, developing those as an asset themselves, right, is a really important idea. And I think that only happens with true financial literacy, true risk literacy, because that is the law of finance. And we can do a much better job than we've been doing thus far.
Well, for what it's worth, man, and then we'll shut this thing down. I think I say this at the end of every call, but I couldn't mean it more. I'm very grateful for being a part of it. The speed that you move, and you mentioned the team there, we'll give them a shout out too. People would probably think, based on how fast you move, and this thing has been iterated and where it's at now, if we looked at it 12 months ago or 6 months ago, you think you'd have a team of 100 behind you, and you're not 100. You're a little bit leaner than that.
Goldman Sachs just basically threw in the towel on Marcus. I'm sure they had a team of thousands, right?
Exactly.
And it really is essential that when you're a startup, you have a really small, coherent, passionate team. That's how you move fast, and if you have legacy culture, legacy people, too much money, it really, slows things down. And so it is a fun time. It's kind of a cherished time. It won't always be this fun.
Yeah.
But we are having fun right now, and I'm excited about the new name, and ultimately showing people what we are really capable of doing.
Yeah. I think next time we'll try to dig into that a little bit. Maybe we'll pull the app back up. We haven't done that in a few
Cool.
weeks, but that's all I got for you today, brother. Really, really
All
appreciate you
right.
giving me a few
Good to
minutes,
see you,
man.
Josh. Thanks as always. Great questions, great conversation. Have a great couple of weeks, and don't spend too much this Christmas.
Yeah. No promises. Have a good one.
All right. Bye.